Dan, you've been waiting in the wings. We appreciate it. So let's talk billings. You're expecting growth in Q2 of 1% to 2%. That surprised a lot of people. What's going tough here?
Yeah, I think DocuSign has an incredibly strong franchise, Carl, but we have not delivered in the last couple of quarters coming out of the pandemic. And I think the reaction we heard from investors was this should be a growth stock. It's not growing at the rate it should be, and the billings guidance is the focus. Our quarter, if you think about it, we met our top line and bottom line goals for the quarter, but that's not the focus for investors. Is how do we get this back to the growth levels we should have for a franchise that's strong?
Yeah, I know you can't see me, FYI, it's John. So how do you do that? Yeah, it's easier when we're in California looking at each other. How do you do that, particularly when you had a sales organization that you're trying to sort of reconfigure, refocus, and the labor market is tough, and you got the stock issue, which also affects compensation. How do you get all of that done in a way that eventually gets reflected in the stock?
Well, for first, it's very much a back to the basics, right? So if you think about DocuSign pre-pandemic, we were always a very consistent high growth company. And then we had that incredible acceleration that occurred from the pandemic, where we sort of doubled our rate of growth, and we really doubled the size of the company in about 20 months. And so now, as we see that there was so much demand that our customers were pulling forward, and they're now saying, hey, we still love DocuSign, they're not leaving us. They know we're the clear leader and we have the best technology in the space. They're saying, I just got a lot of DocuSign, and we have to manage through that adjustment in that underlying demand. But the focus of it really is in our field organization. So we brought in fantastic new leadership. We talked about that in our North America business. Not only do we have Steve Shute leading global field ops coming from SAP, but we've also brought in leaders in our commercial, our SMB, and now our enterprise business. So we first had to sort of accept that we needed to augment the team we had with new leadership. We've now done that, but there's still a lot of work to go. And as you said, we have a market right now where there's been, in this sort of great resignation space, there's been a lot of turnover. And so that's the second piece we really realized coming into Q1, that we had a lot of change in our field and we needed some time to sort of get the new group ramped, enabled to sell DocuSign. And that's what our focus is right now, very much so.
Now, let's talk about the environment, because it's not just affecting DocuSign, affecting a lot of companies. I believe on the call, you said it was difficult to really disaggregate how much of what you're seeing in this turbulence is kind of a post-COVID reset, and then how much of it is a macro issue, but you seem to be pointing mostly to post-COVID. A few days ago, though, we're talking to Dave Itticheria, similarly in software, in a growth space, saying, hey, we see some real macro issues in Europe, and we see them probably spreading beyond Europe in the months and quarters to come. How much of this, based on what also Dave was saying, is macro?
Yeah, so I think for us, when we use the word macro, it can mean a lot of things. And what I tried to point out on the call, John, is there's two aspects to what I'd call macro things as opposed to execution and company performance. And believe me, the things we can control are company performance. So that's where our focus is. But your question on the macro, we believe that, yes, interest rates going up is going to be a challenge for businesses like ours, where we have a lot of financial services, real estate people. If there's going to be fewer mortgages, then there will be fewer demand for DocuSign in that space. But the concept of the macroeconomics beyond that, in terms of things like inflation, in terms of potential recession, we don't think that is as big of a challenge for DocuSign as what we're facing coming out of the pandemic, where, again, we had that giant pull forward of demand. Now we're adjusting to that and get to that equilibrium. We expected it to be faster. It should have been faster, and that's where the execution piece comes into place. That's why when I talk about that disaggregation of the macro, I don't want to make it look like we're trying to use macro as an excuse. Macro is going to be a phenomenon for all businesses, but DocuSign is a strong enough franchise that we should be able to power through that if we execute at the level we know we can.